Top of the morning, everybody. This is Rick with Hit and Run Candlesticks. Today is Thursday, July 9th, 2020. Want to welcome everybody here. Sure appreciate it. Hey, I want to give a quick shout out to Trader Adam. Yesterday on our YouTube channel, he caught a mistake with one of our links. It wasn't leading to the correct web page, which shows the brokerage statement for the Road to Wealth account. So if you head down below in that the text, click on the little See More right here toward the top, and then you look down, there'll be a string of some text and links. Check it out. Also, while you're down there, we've got a free ebook, the J-Hook Bullish Pattern ebook. If anyone would like to have that, you can click on that link. So again, shout out to Adam. Thank you for sending me a note and letting me know that we had directed that link to the wrong page. Appreciate it. It's all been fixed. Okay, so today I'm going to change things up a little bit. Normally, you see my charts look like this with the dotted red and green. This is the 17 exponential moving average, by the way, this red dots and green dots. I use TC 2000. If anyone is interested in learning how to set that up, I'll be glad to do that. Tomorrow's Friday. Maybe I'll do a video tomorrow on TC 2000, how to set that up. And the black line here, this is just the T line. This is the 8 exponential moving average. And today, I'm going to run over here and use what I call my RBB chart. The RBB chart, we have the T-line on it, we have the 50-day simple on it, and we have what we call the dotted deuce, and then we have the deuce, or the 200 simple moving average. The reason I'm going to use this chart today is I've got a couple of charts I want to show that are RBBs, or rounded bottom breakouts. It's a particular strategy we use. And I want to put this up here so I can talk about that. Well, first, let's take a quick peek at the SPY. So you can see here the SPY has, we've cleared that 200-day simple moving average right here. Come back, a little bit of test, sort of chop around, really just chop around. Now what's happened is we've broken out right at that breakout area, right in here. If we take this high, you look over here, we're flirting with that breakout area. Yesterday we ended up pretty good. The chart pattern yesterday ended up actually quite well. This is one of my favorite chart patterns, where we rally up, we pull back, and then what we're looking for is continued rally. And what this is that J-Hook continuation pattern. Again, that ebook is below. Go grab that link. Takes you to the page. You can download the ebook. It's yours. This is my favorite chart pattern that there is. It's easy to spot, easy to trade. Just a few little rules, tips, and tricks you might find in that ebook. So here's what we're looking for. Right now, I would have to think that let's put a line here, change that to daily, making a few adjustments. You know, right now you have to think that maybe we're headed up here. Let's get rid of that one. There you go. That we may be headed up to this 320.50 area, kind of get into the insides of this top over here. What is it? June 8th, 9th, and 10th over here, June 8th, 9th, 10th. And there's always that possibility of testing the tops up here, maybe a little base out and then breakout on this chart. So let's look at another chart, FNGU, and this is the FANG ETF here. Let's move this up just a tad. There we go. I'm going to change this over here to weekly, and let's move that one up. There you go. So the FANG stocks, I'm convinced that as long as this chart here, FNGU, the FANG stocks, as long as this keeps pushing up, the market will also keep pushing up. It may grind It may test you. It may get a little choppy, but it will grind upwards as long as this chart is moving up. It's my personal opinion. If this chart starts to show some sell signals and a little bit of follow through, then I suspect the market will pull back as well. But this is a chart I use to that I'm using right now anyway to determine what the market might be doing a little bit overall and maybe down the road. So keep an eye on this chart. This may do some good here. Let's take a look at VXX. VXX lost its mojo yesterday. We had a couple of nice little candles right in here previous days. Day before yesterday, we popped up a little bit. We almost got to the T-line. And then yesterday we did get to the T-line. Unfortunately, pulled right back here. Now, we can draw a trend line from these lows over here around June 8th lows, and come up here to the recent low of July 6th, right in here. And you can see we're pushing back right there. So what I'm going to be watching for is how VXX handles this trend line. I suppose there's three directions it could go. It could get to this trend line and it can break down. It could get to the trend line and just sort of base out. It could get to the trend line. Buyers could step in and start moving us up. Well, if that happens, then we're going to have a nice little bounce off the trend line. And then I suspect we will test that 50-day simple moving average, possibly a little higher from that bounce. But it's going to require buyers. Without buyers, this line here is nothing. Absolutely nothing. So we'll watch for the buyers, or maybe the lack of buyers, but keep that in your mind, and that might show whether we have some fear coming into the market or maybe no fear at all. Alrighty, let's look at some charts. And today it looks like I have eight charts. Here's one of them, SPLK, and this came up on the scanner. All these charts, by the way, are from the live trading alerts scanner. That's what I use to scan my charts with, live intraday in real time, and it is what I use to look at in the evenings or the mornings for new trade possibilities based on how they acted yesterday in the chart patterns. And SPLK had a nice little finish yesterday. Nice little finish. We have a Morningstar type chart pattern right here bouncing off the T-line. We've had a nice little run up. And what this does is it creates that Bullish J-Hook type chart pattern. I probably should have done a better job of that. But you can see how that makes a little J in there. And that's a nice little continuation pattern. With a little more bullish attitude, a little bit of follow through, I'm looking for 220.40, possibly higher, but that would be my first swing that I'm looking at on SPLK. WDAY. WDAY is another one. You can see where this one, it did the same thing. You know, we've been trending up overall. We popped up here, and then we pull back, and now we're moving up. Right off the T-line. We love trading with the T-line. One of my favorite moving averages, the T-line here. And we popped up. Now what I'm looking for 206.19 for the next move up. We could actually stretch that a tad. Let's do that. Let's stretch that to about let's make it an even 215 and change. So 215 up there. What we want to do is make sure that we follow the trend. So let's put that trend up there. So I'm gonna lay it on these lows, and the rest of this go where it will. So it's very, very possible that WDAY at some point it starts to wander toward that trend line, and that might be some of the best. That might be where some of the best entry areas might be. I'm going to watch inside, like an inside day is what I would like to see. Nice inside day here. Find that entry. I'm looking for that rally up. And in a perfect world, let's just rally right up. But we all know things don't work that way. So we could just kind of test in here a little bit until we get to that trend line, and that might offer a better entry right in here, and then up toward that 215.20 or even just the 206.20 up here. OKTA, this has been hot. This has been fantastic. Folks in the trading room have been trading this. They've been killing it. What a great job to everybody. And another one of these, it's the same, the same thing. Let's follow the trend up. You can see we're riding the T line up. Let's put a line up this way. You can see we've broken out. Here, let's get the crayons out. There we go. You can see we've broken out. We've pulled back. We created a little flag here. This would have been, if you're into doji buying, that would have been a good area to buy on the doji. We're near that trend line. That certainly we'd be close enough. Well, here's the breakout. I'll be looking today to buy on an inside day. The inside day would be something like this right here, and buy in this area, and I'll be more than happy to hold it if it needs to get to the trend line for support before it starts to break out. You can also watch this chart, and as long as it doesn't break out, it just kind of hangs right in this area, then we also may look at just waiting till it gets closer. Typically the way I trade and what I'm going to look for is this will be on the live trading alert scanner. It runs in real time, so I can see, I can be notified before I see it in the chart. The ticker window will show me that new buyers are buying this. And when I see it in the ticker window, then I know to go look at the chart, and then I make that decision to buy. And if I do start seeing buyers coming into this, that was probably a poor color. There, we'll try red. If I see buyers buying into this, well, I'm going to go ahead and buy into it. And as long as we stay above the stop, then I'm cool and very good with that trade. JD came up very nice yesterday. Very nice pop out. So when we pop out like this, when we break out like this on some pretty good volume, note the volume down here. Nice little breakout volume down here. That's a signal that there's enough buyers around and their plans are to take it higher. Now, at any time, some sellers could sneak in. There's no question about that. We never lose track of that. Never lose track. There's another side to the coin, so we always want to remember that. But right now, the buyers seem to be in charge. Now that we have broken out, this could start the new leg up. And I'm looking at about 270, maybe, I'm sorry, 70.10, maybe up to about 71, 72 perhaps. So this is just a simple, how do charts work? Well, if you go back and look at all of this, this is how they work. They go up, they go back, they go up, they go back, and they go up. So if we can hang on to the pullbacks, as long as the pullbacks doesn't break any kind of support or any kind of rule that you have, then we may be looking at that 70.10, maybe into the 72 area as well for a trade on JD. Macy's. Okay, now this is the reason I'm using this particular chart right here. This is called the RBB chart. This is my favorite strategy of all time. It's the rounded bottom breakout. In a nutshell, we're looking for a chart that's been downtrending. Let me draw this out, I guess. So we've been looking for a chart that's downtrending. We want to see it basing out. And then what we want is to see it break out over the 50-day moving average. And that's where the rounded bottom breakout becomes the rounded bottom breakout strategy. You can see here on Macy's, this was an alert. This is where we could have started buying Macy's, and it could have paid all the way up to the dotted deuce. From the dotted deuce, it has pulled back. It's now back at the 50-day simple moving average. We closed below one day. The bulls turned around and closed us back up. Here we've got this pop to the upside, And then we've got consolidation here, sitting right at the 50-day simple moving average with a bullish morning star, three bar pattern right there. So I'm looking for an entry on Macy's. We'll use the buy box here. Buy box, we're going to put a little bit on top, and then we'll come down to the bottom of those candles. Excuse me. So anywhere in this box area, I may be looking to buy this. Also, a breakout. I mean, that's certainly acceptable when we see follow through up over those candles. That's very acceptable for a buy. We're looking at about 850, 860 here as a target, possibly moving all the way to the dotted deuce. If it's bought inside that box, you know, you're looking at 28%, 27, 28%. And then 36% all the way up here to the dotted deuce. So let's keep our eyes on Macy's. Coop. Coop is another one. Coop is a chart that has been trending. Once again, we've got this bullish J-hook in here. There's the run up, and here's the J, and we're looking for it to move up to about 330, 331, 332 up here on Coop, C-O-U-P. Again, the down below in the text, the ebook, J-Hook Continuation ebook, we've put it down there as a bonus or a gift, whatever you want to call it, from all of us here at Hit Run Candlesticks. So please head down there and download it. Hey, and remember too, while you're down in that area, if you like what we're doing, if you like this, please hit the thumbs up button. Let us know. Let us know what, that you like it. Subscribe. Last week or 2 weeks ago, I guess, we opened the room up for subscribers. We put an announcement in there. Subscribers could come into the room for 3 days, I think. And we'll be doing that here in a few days. We're going to do that again. So make sure you subscribe. Give us a thumbs up. Leave us a message. Leave us a message. Hey, I've got a couple more trades. Let's look at Marvel. Marvel's another one that looks like we're headed up here to about $40.90, maybe even up to 42. We might see 42 out of this. On Marvel, we've rallied here, pulled back. Looks like we have a little double bottom popping up, and then we moved up here. You can also see the bullish W pattern in here, and we've broken out of that bullish W pattern. So once again, it's the same old thing. We're going to look for an inside day entry, and right now you can see that we're opening up right at the highs. But if we get a little wick, a little dip down in there, that might be a nice little entry for you, and that could put you up here about a 12.5% trade to 40, say 41, and then up into 42. That would put you about 15% swing trade on the chart. Now the last one I have is Disney. This is another rounded bottom breakout. I'm looking for a target of 123.50 and up here toward the 200, and maybe these tops of about 128.20. So that would, and Disney can go higher. All these can go higher. When I'm looking for a trade, I want to consider what can it do for me. I want to consider my boundaries. I want to consider my risk, things like that. And this would be my world to trade in right there. And my risk would be pretty small. So if I bought, say, inside day, my risk maybe would be down here. You always want a good risk-reward ratio. A lot of folks look for 2 to 1. I happen to think 3 to 1 or more is better. But you don't want to go out there risking 50-50. Your risk to the downside is $5. Your winnings to the upside is $5. You don't want to do that. You want risk $5 maybe, and you want $15 to the upside or more. I just used $5. So in this rounded bottom breakout, by the way, this is one right here that got us all the way to the 200-day period moving average here. So today, what we're going to be looking for is that inside day. I'd love to buy it on an inside day. Buying on a breakout would not necessarily break my heart, but I would like the inside day buy. Looking for about a 123.50, like I said, up here to 200 for a target. We've got a nice little 3-bar bottom. We popped up and we started moving to the right. So if you take a look at this chart, look what it's done. Here we are, low to a high, to a higher low, and then we're working to a higher high. I love that chart pattern right there, that little thunderbolt type chart pattern, and it's inside my favorite strategy, the rounded bottom breakout. Alrighty, remember, if you like what we're doing, give us a thumbs up. If you really like what we're doing, subscribe. If you'd like a few things that we're going to pass around to subscribers, go ahead and subscribe. It's painless. And if you can, check it out. Check us out in the trading room. Look below. There is a link for a 60-day trial. 49 bucks. How can you go wrong? 60 days, $49. Come on in the trading room. All right, everybody have a wonderful day, and we'll see you either in the trading room or I'll be here tomorrow. Everyone take care.